What's going on, guys? Hope you guys are doing well. I wanted to talk about the news with the rising interest rates. As you guys know, on Wednesday, the Federal Reserve announced a um, quarter percentage raise in interest rates. Since the pandemic, the interest rates have been near zero, essentially, in order to keep the economy afloat while we went through the pandemic. And after lately, we've been going through inflation. And inflation has something to do with those lower interest rates because when credit is cheaper, then people like to borrow money. People like to borrow money in order to, have money at lower interest rates, and you have more spending in the economy. Hence the reason why the Federal Reserve lowered the interest rates at the start of the pandemic in order to keep the economy afloat while we went through the COVID situation. And the Federal Reserve thought that inflation would be transitory, meaning they said the word transitory a lot, meaning it would just fade away. But obviously, it has not faded away. It's been, going on, and it's at 40 years, a 40-year high, new high as of right now. So it's definitely a big deal right now. As you can see, when you go to different stores, as you can see, go to the gas station, as people can see through their rent, everything is rising up. So the Federal Reserve announced a quarter percentage interest rate hike. That's going to be the first hike, and they expect to do 6 more as of right now. 6 more hikes, and we don't know if those hikes going to include 25, way quarter percentage hike, or will some of those hikes be 50 point hikes? So we don't know, but we do know that Wednesday they did state that hike, and the market did go up. So the market did rally well. Stock market did rally well with them increasing, because a lot of times you don't know how the stock market is going to digest the information, but they did digest it, and the stock market has been on a little run since Wednesday. So we'll see what happens from there. And I wanted to talk briefly on how these rate hikes are going to impact long-term rates versus short-term rates. Long-term rates, such as a mortgage, it will have an impact on those big time. If you are a person right now who already has a mortgage and you are in a fixed term mortgage, then you will be okay because your rate is at a fixed term. So you will be okay. It won't impact you in any way. If you are a person who is trying to buy a house, you don't have a house right now, but you are trying to buy a house, then it can have a huge impact, even if you're trying to get a fixed rate mortgage, because right now the mortgage rates are rising up some, essentially. And with the quarter rate hike, is going to help boost the interest rates, which is going to impact the money that you pay for your mortgage. As you know, when you pay your mortgage, you pay a part of your mortgage payment is principal, but part of it is also interest as well. So as these interest rates get higher, then it will impact you. So that's very huge. For someone who has an adjustable rate mortgage, it can have a huge impact as well, because those are adjustable, meaning as the interest rates rise up, as the Federal Reserve increase interest rates, then it's going to impact those adjustable rate mortgages, because they fluctuate depending on the rising or the lowering of interest rates by the Federal Reserve. So that's huge. That's very huge. So you can, especially on a mortgage, because if you're a person who, it's a huge difference between a 4% mortgage and then rates rising, and rates rise to 4.5. Over a lifespan of a 15-year fixed mortgage or a 30-year fixed mortgage, it can be huge. So it's very important for someone who's buying a house to try to get a mortgage at a great rate, because rates do matter. They do matter because they determine how much you're going to spend in interest over the lifetime of a year, over years, over the lifespan of a loan. So it's very huge. As far as short-term rates, as far as credit card, it shouldn't. I mean, right now, with the 0.25% rate hike, it won't break the bank for people who have credit cards. Some people have fixed rates, while some people have variable rates, which those it will be impacted. So if you do have a rate on your credit card that is a variable rate, it will be impacted as far as the Federal Reserve, because as the Federal Reserve did the 0.25% rate hike, your interest rate will go up by that percentage. So it won't make a huge difference with that rate hike, but say for example the Federal Reserve do 6 more of those hikes, then you could start to see a big difference, especially if you're a person who has a big credit card balance and you owe a big amount, substantial amount. It can make a big difference in as far as how much extra interest that you're paying every month. So it's a huge deal over time as the Federal Reserve raise the interest rates. And as far as the stock market, it's a huge deal, especially for companies who are growth companies, meaning companies that are new, or growth companies that don't make any money right now, or companies that are barely making money but still that's growing. You're still growing. It makes a huge difference because those companies borrow money in order to grow. So they borrow money. So if basically with the Federal Reserve raising interest rates, it's going to cost more for those companies to borrow money, because business loans are going to be more expensive because because of the rising of the interest rate. So those companies are going to have to borrow money at higher interest rates. That's a big deal because they're taking away from some of those profits. And also a second point with for those growth companies, when the interest rates are rising, they borrow money and things of that nature. A lot of investors invest those companies based off future profits, but the value of those future profits are going to be less now today because of the raising of those interest rates. So it's a big deal, so it is something to look out for. I just wanted to break that down really quickly to talk about, the logic behind the raising of the interest rates, and let's talk about the impact on what it's going to have on long-term rates, short-term rates, and also the stock market. So I hope this really helps you understand about those interest rates, and I will be coming back with some more information. So if you could subscribe to the channel, hit that like button, and I will talk to you guys soon. Peace.